Okay, hello everyone. Welcome to the Hodlcast. Today we have special guest Teddy Fusaro of the COO of Bitwise Investments. And Teddy, thank you so much for coming on. Can we get started, I guess, with just a little bit about your professional background and your role at Bitwise?
Yeah, absolutely, Sasha. Thank you for having me. It's great to be here. Great to be with you. I'll tell you a little bit about my background in history. My background is primarily in exchange-traded funds and a little bit of time in investment banking. Most recently, I was at a firm before Bitwise called Index IQ. Index IQ was a alternative ETF manager. We were pioneers in self-indexing, pioneers in alternative strategies inside a liquid wrapper, primarily hedge fund replication strategies. Index IQ was a business that we sold to New York Life Investments about 3.5, 4 years ago. And then before that, I was at another early stage ETF issuer and a few years at Goldman before that. My role here at Bitwise Asset Management is COO. And what we've done at the firm is attempted to bring together people who have backgrounds from sort of two different worlds. People who have backgrounds in software, technology, engineering, the software side of the business, understanding protocols, blockchains, et cetera. And then also people like myself who have deep history and experience in traditional asset management, financial services industries. So we have executives and we have people who work here that come from both of those sides of the sort of the grid. And we think that's a unique proposition. We also think it's a necessary thing to be a digital currency asset manager, especially with the things that we're trying to accomplish as a firm.
Absolutely, and I think the strength of your team was really evident in this the ETF proposal that was published, the 227-page research report. It was very impressive. Can you tell us a little bit about your experience in this ETF application?
Yeah, absolutely. Thanks for raising that. There's been an overwhelming response to the work that we did relative to our ETF application. I think our approach is somewhat differentiated in terms of how we've looked at the ETF application process. This has been going on, as you know, Sasha, for quite some time now, since 2013, when Cameron and Tyler Winklevoss first attempted to get approval for their Bitcoin ETF. And what has happened over that intervening 5-year period is really that the SEC has produced an incredible amount of documentation, an incredible number of questions, and a very long list of things that need to be looked into, investigated, and answered before an ETF application can be approved. Our approach, and the reason that the report that we released is 225 pages, and frankly, that's only the start of what we're going to have to provide, we think. The reason that it's 225 pages long is because we think that body of questions that have been asked are all the right questions that need to be asked before the regulators are going to get comfortable. And our approach is to try to handle them one by one and look at all the questions and try to answer all of them. That's really what we're doing here.
Mm-hmm. And so what are your thoughts also on like the overall Bitcoin futures market? And I guess, more specific. So the SIBO has recently suspended the futures, and how does that relate to the ETF proposal?
Yeah, great question. Something that we've talked about, especially in light of the presentation and the role of the futures market and why we think that's important. So I'll start by saying the overall futures market, which right now includes both the CME contracts and the SIBO contracts, we think that market is a large and significant and robust market for trading in Bitcoin exposure. One of the things that we showed in our presentation is that once you take away what we believe to be fabricated volume that has no impact on the market for Bitcoin itself, once you strip that all away and you look at what remains, of course, the headline grabber was many of the headlines were 95% of Bitcoin trading volume is fake. The reality is that that's just a distraction. Once you get rid of all that data that just is bad data and is not real, and you look at what remains, you have a healthy and robust, well arbitraged, and efficiently operating market for Bitcoin on these exchanges that we've identified as real. And when you look at what's left there, it's about $250 to $300 million worth of average volume in the spot market. You compare that to the futures market. The futures market no longer looks small. The futures market actually looks large relative to the piece of the pie that's left when you're talking about what we think is the real volume trading in Bitcoin. So as a result, we paid close attention to the futures markets, and particularly this question that you asked, more to the point, about what is happening with the CBOE contract and what do we make of that. We think that the reality there is just that the CME won the race. They are the dominant contract. That's where all the liquidity is. That's where all the volume is. Particularly if you look at recent months, they've just won, and there is sort of a winner-take-all effect in some of these markets. What little volume there was, maybe $5 or $6 million that traded daily in the CBOE contract, our assessment is that volume will just migrate over to the CME contract. There were some structural reasons, some design-related reasons that the CBOE contract didn't work as well as the CME contract. It's a smaller contract size. The pricing mechanism was not as robust. And those are the reasons that we think that it's not going to have a big impact on the market.
Okay. Oh, thank you for explaining that. Yeah. So that makes sense. So it's all going to pool in the CME. They're still operating and everything. Okay.
Yeah, that's our sense. We also don't we don't know what CBOE's plans are. We don't know if they're going to. There are several initiatives out there, as you know, Sasha, for physically settled Bitcoin futures contracts that are in application, whether that's backed or ErisX. We don't know what CBOE's direct plans are on that front. Maybe they're going to do something else. Maybe they're going to step away. But largely, we think the liquidity is at CME. It was going to stay there. CME won that race, and we expect that that's going to continue.
Mm-hmm. Nice. And when you discovered all of these fake volumes on a lot of the exchanges, what kind of metrics did you use to identify that the volumes were fake?
Yeah, that's again a really good question, Sasha. So what our research team did is we looked at all 81 exchanges that reported having more than $1 million worth of Bitcoin trading volume on a daily basis. And some of these are crazy. You go to the top of the list, there's exchanges that report $500 million of Bitcoin trading every day. But when you're a practitioner in the market, if you trade on a daily basis, or if you are a market maker, an institutional market maker who's making markets on these exchanges, there's no experience of trading, participating in that $450 million worth of volume that's on something like Coinbene or Coinbene, however you pronounce it.
Which I think got hacked this morning. So I saw on Twitter. Yeah. Is
that right? Those are the issues that can happen, because these are just effectively websites that are printing numbers to attempt to attract users in sort of most likely illegal and definitely scammy ways. So what we did was we went to those data sources and we pulled from them as much data as we could take in, the type of trading data and order book data that you'd expect to be able to get from regulated lit exchanges in the equities market, for example. We looked at we pulled in 4 times a second. We pulled in the order books, which show all the bids and all the offers that are available from the data source. And then we pulled in all the trades as well. So all the prints and all the order books, and we recreated this over a 4-day period, 4 times a second, looking at all the data that we could take in. And once you've done the work to aggregate all that data and you look at what the results are, it becomes painfully obvious, flagrantly obvious, the instances where these exchanges are not even trying that hard to hide the fact that what they're doing is just printing numbers on their screen. Some of the basic things that you can look for: how does the bid-ask spread interact with the bid-ask spread of the real market? What are the sizes of the trades that are occurring on these exchanges? What do those patterns look like? I know you have probably some more questions about this, and we'll go a little more detail into it. But that's where we started, was getting all the data and then looking at all that data and drawing conclusions from what that data looks like.
Yeah, without jumping ahead too much, but some of the really shocking things that you showed in the report were, bid ask spreads in the hundred, like ranging from 30 to I think it was $371 as a spread, and then you show the comparison on Coinbase or, a more, I guess, trustworthy exchange, and it's less than a penny of a spread. So yeah.
Right. And a lot of this stuff a lot of the work that we've done is really putting data behind the eye test or the smell test, right? You look at a real exchange like Coinbase. You're talking about an asset in Bitcoin that it's a $4,000 handle, trades at a 1 penny spread. That makes it one of, if not the most tightly quoted financial asset or commodity in the whole world. You can trade it for a penny, and they report something like $25 to $30 million worth of volume every day. It's a venture-backed company that has raised hundreds of millions of dollars in venture backing from reputable investors and venture capital firms and well-known entities in the U.S. They have a widely reported valuation of $8 billion. They have over 500 employees. They have a huge social media footprint. They appear in hundreds of Google searches. Their web traffic is commensurately high. And you look at one of these other exchanges, like the sort of fraudulent ones that we're talking about, and none of that stuff is true. Can't find any indications of their venture capital raise. You can't find any indications of how many employees they have. Their web traffic is low. They don't appear in Google search results. So those are sort of the obvious ways that you can begin to draw a picture of what's actually happening at some of these places.
I remember when I first started this firm at DLT, I got a white paper on my desk that one of the metrics they had for this, it was, they wanted to do an ICO, and, full disclosure, I haven't advised on any ICOs that, like, basically I read a lot of these papers, but I didn't, work on them. But anyway, this company, they wanted to wash trade their token so that it would create this volume. And that was the first time I realized, oh, this is what is happening. And then it makes sense that they're doing it on all of the exchanges as well. But do you think it doesn't have much of impact on the price, or do you think it does?
Yeah,
of Bitcoin?
Yeah, absolutely, and great point. That is the sort of the reason that these exchanges were doing this, was to get their rankings on popular websites for looking at volume and data, was to get their rankings elevated so that ICO types of projects that were oftentimes, as you know, illegally offered securities transactions would go to their website and think, oh, this is a popular exchange. This is where I should list my ICO token. And then the exchange would charge the ICO project a listing fee, in many cases, hundreds of thousands of dollars, if not more. They would charge the ICO that listing fee, and that's the sort of the reason for this fabrication of volume. But more to your point, the question of whether or not we think that it impacts the price. No, we don't think it impacts the price at all. We think that the way that one should think about what these numbers are, it'd be like, Sasha, it'd be like me and you if we started a website and we just started printing numbers on it, and we said, these are Bitcoin trades. And no, they're not.
Kind of like what OneCoin did.
Right, exactly. And if you actually look, part of what we looked at is the spread analysis, which you mentioned earlier. If you look at the prices for Bitcoin on the 10 exchanges that we've identified as real exchanges, it's a very tightly correlated, efficiently arbitraged single price for Bitcoin across all of these platforms. And let's say that level's here, where my hand is. If you look at what these other websites do, they publish prices that are out way wide from the actual price of Bitcoin. So we talked about Coinbase usually trading at a 1 cent spread, right? You look at these other websites and they'll have like a $30 or $40 or $50 spread. So there's not even a way for a market maker to interact with that order. So that's why we don't think it really has any impact on the pricing. They're just numbers that are printed on a screen.
Mm-hmm. And so the SEC has stated they're looking for an ETF proposal that'll show the underlying market is uniquely resistant to manipulation, or that it's a regulated market of significant size. So I think, your report kind of spoke to that, but do you agree, or do you believe Bitcoin would meet those criteria at the stage it's at today?
Yeah, absolutely. Another great question, Sasha. This is one of the things that we attempt to directly address in our presentation, and I'll handle both of those separately. Effectively, those are the two. When the SEC disapproved the Cameron and Tyler Winklevoss ETF proposal, they left us with this magnum opus, a 92-page disapproval order that asked all of the questions that there are to ask. There's of course other things that we need to ask and answer in addition to that. But if you boil all that down and you looked at what the two things that in some very nerdy ETF legal circles, ex-Bitcoin legal circles, the two things that were left behind that may be the most important in that document have come to be known as the Winklevoss standard. And those two things that are the legal standard proposed in that order are the two things that you highlighted. One, is there a regulated market of significant size that the ETF's proposed listing exchange can have a surveillance sharing agreement with? That's one of the ways that you could satisfy the questions that they've asked. And of course, now that we have redefined and clarified that the market for Bitcoin is only several $100 million daily, we don't think that's the regulated market of significant size. It's more well regulated than people realize. It's more Western than people realize. And there are regulations that relate to it, but not the types of regulations that we're talking about here, like a national securities exchange or a national futures exchange. But once you look at that spot market, and it's this big, and then you look at the futures market, it's much larger relative to the new real number than the number that most people commonly describe. And that's the exchange that we think is a regulated market of significant size, the futures market. And of course, New York Stock Exchange, ARCA, NYSE ARCA, our proposed listing venue, does have a surveillance sharing agreement with the CME. The second standard that you raised is whether or not Bitcoin itself is uniquely resistant to manipulation. That question is a very interesting one, and we do think that there's an answer to that question as well. And we think the way that you answer that question is you ask yourself, how could something be uniquely resistant to manipulation? You have to ask and answer, what is unique about the asset? And what is unique about Bitcoin? What's unique about Bitcoin is, as you know, there are a number of things that are unique about Bitcoin. But when it comes to what makes it unique in a sense for how that relates to trading, what makes it unique is that it's the world's first ever digital commodity. It is a globally fungible, immediately transferable commodity that has almost zero storage costs. And I'm not talking about the cost of custody. I'm talking about storage costs that you'd think about for gold bars or for copper, for oil, where you need big tankers, right? Transportation costs, and those commodities are much different. And that's the thing that makes Bitcoin unique in its resistance to manipulation, because a Bitcoin here is in San Francisco, where I am today, is worth the same thing as a Bitcoin in New York. It's worth the same thing as a Bitcoin in Shanghai. It's worth the same thing as a Bitcoin in Sao Paulo. And it trades 24/7, 365. And any time that a difference in price will pop up in one place, it will quickly be arbitraged away by people who are buying and selling in other places. And that's why we think that there's also an interesting answer to that question.
Mm-hmm, absolutely. Now, just a little comment on the fungibility aspect. Have you examined, I don't know for sure that this is taking place, but I've heard that in the OTC market, there's a big price differential for newly mined coins versus coins that have had, gone across several different addresses. Do you think that's going to play into the fungibility aspect at all? Or do you need a whitelist, I guess, is kind of...
Yeah, This is actually really this is the a really interesting question that you raise about is there a preference for freshly minted coins for some reason? Um, we think that the data doesn't really support that
Oh,
largely.
good. I'm glad to hear that. Yeah.
But I will say we should treat the question fairly. We should say there are some people who may have a preference for fresh coins that are newly minted from recent blocks.
Mhm.
How long does that last for? Is it a one-time sale? Someone's willing to pay, maybe one particular investor is willing to pay for a freshly minted coin. Does that investor then have the same preference to resell that coin? We don't think that's a long-term dynamic. We think that Bitcoin is fully fungible on a global scale. And although that there has been some discussion of this dynamic, we do not think that it is a broad market impacting dynamic that changes Bitcoin's global fungibility.
Oh, good. I think that's like been one of when I heard that there's this price differential or just some of the OFAC list, putting those coins on. It's like, well, if certain coins touch that address and then they're no longer useful, it really could destroy fungibility. So I'm glad to hear that. And I think there's a lot of technology being built as we speak to help with fungibility too. So, yeah. And around,
Really good point though, Sasha, and I think it's important for people to consider. As you know, you're a lawyer yourself. People do need to consider the provenance of certain assets and their obligations related to AML and KYC. Those are important considerations, and those do need to be taken into account. But we think there are ways for doing that through the traditional reporting channels related to suspicious activity reporting and anti-money laundering regulations.
mm-hmm. And so when, after you submitted this beautiful report, when do you expect to hear back from the SEC?
Yeah, thanks for calling the report beautiful. At Bitwise, one of the people that comes from the sort of software side of the house that we have here is a designer, and we love the ability to take what can sometimes be boring information or highly technical information and turn it into something that looks great and shows well. And we're always excited to have the ability to do that here as a sort of tech startup in the asset management business. The general timeline is the way that the timeline works for 19b4 filings from a procedural perspective, and that's what the actual application is that's with the commission right now. It's a 19b4 request for rule change that has been filed on behalf of the proposed ETF by our listing exchange or proposed listing venue, which is NYSE Arca. When the exchange files that 19b4 with the Division of Trading and Markets, what happens is that kicks off this sort of statutory timeline. The first period, it's effectively a maximum 240-day period, but there are sort of waypoints that get extended along the way. The first one is after 45 days. That first 45-day period expires somewhere on or around April 2nd. So we do expect to hear something on or before that date.
Okay, excellent. We'll keep our ears to the ground in anticipation for that. I certainly hope it's a positive result back for you. So say they do approve it and everything. What do you expect the volumes will be like on the ETF?
Yeah, that's an interesting question too. And now, obviously, we want to be careful around making forward-looking statements. But one interesting thing that we did do in the presentation that we made, and that we've been talking about, is we looked historically at what has happened in other commodity ETFs that have launched for the first time. Our global head of research here is a good time to mention. Our global head of research at Bitwise is a guy named Matt Hogan, who I know you're familiar with, Sasha. He is the former CEO of a website called ETF.com, which for those of us who've been in the ETF industry for a long time, is sort of the daily Bible for understanding what is happening in the ETF world. It's the most robust data analytics system. He actually, the part of that business that they sold to FactSet Research Systems, which is a large data provider in the financial services industry, now underpins their entire ETF research platform. He's also the founder of the largest ETF conference in the world. It's called Inside ETFs, and he wrote the the monograph for the CFA Society on how ETFs work. So he has deep experience in educating people on ETFs and how they work. He was an early sort of believer in the movement to ETFs away from mutual funds, and has deep experience there with classifying, researching, looking at ETFs, and we're really lucky to have him on our team. So part of what him and his team looked at when we did this was what was the market reception to prior commodities-based ETFs when they were brought to market. And largely what the research shows, what the historical data shows, is that there was one that had a massive influx of assets early on in its life, and that was GLD, which is the gold ETF that you're likely familiar with. All of the others had relatively muted flows. We obviously wouldn't be working on launching a product or applying for the ability to launch a product. Didn't think that it was going to be successful. But the reality is we have some historical data to suggest what might happen. But other than that, it's just too hard to know, to predict what the asset flows would be like into the fund.
Mm-hmm. And so who could access the ETF? Will it be limited to accredited investors, or will retail investors be able to buy it?
Yeah, so that would be what is going to be different about an exchange-traded fund, particularly in the U.S. Right now, what Bitwise does is we manage privately offered funds under Regulation D, 506C, private fund exemption. We only sell the interests in the funds to accredited investors who reach a certain standard of net worth or income, as you know, Sasha. The ETF would be different because it would be a publicly available product that can be bought through just about any broker-dealer on any stock exchange. And that would be a breakthrough of sorts for Bitcoin.
Oh, yeah, big time.
The reason we think it's important, though, is because we think that investors deserve the protections that come with a listed and regulated product. Right now, investors are at risk of going to places that, like these exchanges that are printing fabricated volume, they're at risk of going to these places and signing up, not getting the proper disclosures, taking on risks that they're not told about, and other associated types of negative scenarios. What happens with an ETF, although it is available to retail investors, it's offered in a format where they're receiving all of the disclosures. They have a clear description of what the risks are. They know how the product works, and we think that the best way to be able to offer it to retail investors is in a regulated format with transparency, and that's why we're working on what we're working on.
Mm-hmm, absolutely. And investment advisors too can, with that ETF, they'd be able to offer, all of their clients even a 1% or 0.5% exposure to the Bitcoin market, which right now they can't access. Yeah. I guess that brings us to another important question around the custody. That's been a big challenge, I think, for bringing Bitcoin to the more regulated market. The SEC requires that it's held in, a trusted third-party custodian. And I saw you've done a lot of work around that, that pain point of the market. Can you tell us a little bit about that?
Yeah, absolutely. One of the ways that our filing or our application is unique, our proposed ETF is unique, is that we've disclosed that we intend to use a third-party custodian to safe hold and safe keep and hold the assets, the Bitcoin. We think that's the right way to do it. We think that has been the gold standard, or given our audience here, maybe I should say the digital gold standard in this country for the past 80 years. And we think that that's the way that it should work for public products in the cryptocurrency space as well. And we also think that whereas maybe 2 years ago or a year ago, the right types of firms with the right types of procedures and controls in place didn't exist to be able to support this kind of process. They exist now. There are multiple firms that are operating under various types of state regulatory structures that offer custody in a way that is safe, secure, well documented, and we think meets the standard of institutional level custody. And we think that's the way that it should be done. As an asset manager, we think that the custody of the assets, the private keys, and we can dig a little bit more into what this means if you're interested. But we think that that belongs at a third party, and we're excited to talk more about why we think that that's actually a solved problem for Bitcoin, because that it can be delivered in an institutional package, and it can be done in a way that is professional and ready for this type of market.
Mm-hmm. Well, yeah, I think that, the custody solution, or just the aspect of it, that's, I think, the biggest challenge for Bitcoin is, not everyone is capable of being their own bank, and the bank has had years and years of practice and insurance on how to store value for people. And I have personally lost some of my private keys at one point. I've had a few mishaps, and I think everyone talks about it as a joke, like that's a rite of passage. When you get into Bitcoin, you have to get scammed or have something happen for you to learn how to really protect your private keys. And I don't think everyone's ready for that, or that might not be the best mantra for widespread global adoption of Bitcoin, that, you got to get scammed at least once and then you'll learn. We've seen it time and time again with Mt. Gox being, the first, or empty Gox, some people call it, instead of empty. But, and then more recently with the Canadian exchange. So do you think, the SEC's primary purpose is to protect investors? So maybe something like this, where they can feel more secure with the average person investing in Bitcoin through an intermediary that does have the sufficient knowledge and skill to protect the private keys, might be, more a safer way to access the investment.
Yeah, there's a lot there, and I want to touch on a few things from what you just said, and thanks for sharing the anecdote. I think you touch on something that's important, which is that our interactions with the SEC staff indicate to us that they understand this stuff in a deep way. They understand the difference between hot wallets and cold wallets, or they understand the difference between online custody, online key storage, and offline key storage. They understand the difference between storing your assets on an exchange and storing them with a custodian. They've been looking at this stuff for 5 years, and they're well educated on it. And that's part of why the dialogue is sort of elevated. We think the dialogue is relatively high in terms of where we are with our discussion. That's why our presentation goes into a relatively complex level of detail. No question that what you brought up related to custody is a risk, and that's why we think that it needs to be handled properly. As we saw in the Quadriga CX fiasco, if you don't have your assets at a place where they are held in custody, where there are procedures in place for key generation, key storage, backup, redundancy, then you haven't mitigated the risk of losing your assets or losing your keys. And this is very serious. It's a very serious subject. But we think that the reason that you outsource this to a specialty institution, a third-party custodian, is because there are ways of doing it right that are verifiable and auditable and safe and redundant. And what we talk about is, when we talk about custody of digital assets, we talk about generation of the private key, storage of the private key, and backing up that private key. And when you think about that, this is not rocket science. This is operational security and operational procedures that can be verified, tested, and audited. And we feel really confident about the fact that you can do that well at an institutional level. You can do that really well. There are ways to do it. Custody of private keys is also something that underpins large swaths of the internet that exist today. It's not commonly known, but you can view some of the procedures, for example, that underpin ICANN, which is the institute that oversees web domain names. They videotape their private key generation ceremonies. Super boring, but if you're interested, you should check it out. And that's a thing that we've talked about a little bit, which is normalizing the idea of public-private key cryptography, and that this is a thing that already exists and already underpins a large piece of the infrastructure that supports the way that we use the internet today, point of sale transactions, for example. So it's not like private key generation and storage in itself is not a new thing that we don't know how to do as a society. It underpins things that already exist, and there are procedures for doing it well.
Mm-hmm. And who would you say are the main players that are competing to kind of, I guess, take the market for this Bitcoin custody?
Yeah, absolutely. Good question there too. So we've spent a lot of time, as you can imagine, surveying the space, doing due diligence on it, talking to the different custodians and looking at what their procedures are and the types of regulatory structures they have, et cetera. There are a number of custodians that have high quality service delivery teams, security procedures, safety, and ability to provide a high level of custody for cryptocurrencies, particularly Bitcoin. Three that I'll mention are Coinbase Custody, Fidelity Digital Assets, and BitGo. All three of those firms have built platforms that are not only tested over time and robustly implemented, but they're also ready to be delivered in a sort of institutional format, the way that one would expect to be delivered a service from a traditional custodian in the asset management space, like Bank of New York Mellon or State Street, JP Morgan, Brown Brothers Harriman. The way that they have developed their procedures and their service delivery model has now arrived at the sort of institutional scale that you expect in the asset management business.
Excellent. That's good to know. Yeah, I met a guy named Bob from Fidelity a little while ago, and he was, I don't know if you know him, and I can't think of his last name offhand right now, but he seemed very intelligent, and he was a former physicist, and he's someone that I think I would have a lot of trust in figuring out how to handle this storage. He's an early Bitcoiner.
Oh, yeah, we're really excited about what Fidelity Digital Assets is bringing to the market. I don't know how much your audience knows about Fidelity's digital assets initiative, but it sits inside their sort of innovator and accelerator group, which they take quite seriously. They have a number of people who are really excited about cryptocurrencies and sort of the future of the Internet of Value, which is how we think about the advent of cryptocurrencies. And they're working really hard to implement the solutions that they're bringing to the market. And obviously, we know about Fidelity as an institution, their history in the asset management space, in the brokerage space, in the platform space. So I think for the whole industry, it's exciting to have them coming online. So we're looking forward to seeing how they are able to participate in the community going forward.
Mm-hmm. Agreed. And so there was recently a pretty aggressive advertising campaign around New York City saying crypto needs rules. Would you agree with that sentiment, or what did you make of those ads?
Yeah, I'm on the hot seat now, Sasha.
Sorry, I didn't mean to.
No, I'm very comfortable here. Bitcoin and crypto is so interesting, endlessly interesting, as you know, because it attracts so many different types of people. It attracts people who are politically motivated. Obviously, there's such a strong libertarian undercurrent. It attracts people who are philosophically motivated, whether it's for privacy or anonymity, or the belief that they should be able to transact freely online without someone knowing what they're doing. There are different assets that support that. It brings in entrepreneurs. It brings in engineers who are really excited about being able to work on something that's rapidly changing, and I think a lot of us believe it's going to change the way that we live online and transact online in the future. Brings in businessmen, but it brings in lawyers, and it brings in regulators. And I think that there is a tension between the culture of the sort of early adopters, libertarians, engineers who worked on the project early on and built the community for what it is. And that's part of what I love and what we love here at Bitwise. But then you have this other part of the ecosystem, which is people that also realize that in order for cryptocurrencies and Bitcoin specifically to really take hold and to grow and to flourish into what we think they can become, that subset of the community thinks that there do need to be rules, and there do need to be regulations, and there do need to be guardrails. I think Bitwise falls into that second camp. We do think that there needs to be clarity on what the rules are. We actually think that a lot of the rules that exist for traditional securities regulation can be applied pretty clearly to the way you're able to operate in the space, assuming you're willing to pay the right attorneys to do it. You can get good legal counsel, and they can tell you what you can and can't do. Do we want to be able to do, or do some people want to be able to do more? Or do they wish the rules were different? Sure. But the reality is there is an existing set of rules and regulations that people can abide by. But what I think is more important, more to the point, is what needs to happen. We think that regulation in general for cryptocurrency and Bitcoin is not it's not a Bitcoin issue. It's not a Gemini issue. It's a global competitiveness issue. Right? Our view is that the US regulators need to act in a way that provides clarity, but also gives enough freedom so that the Internet of Value can evolve and flourish the same way that the commercial internet did, so that the United States can continue to be a leader as we transition into a new digital age and a different digital age. And I think that there is a risk at the national level that if regulators don't adopt the right way of dealing with this, then there's a risk of falling behind, because other countries will. And Bitcoin is here to stay. Cryptocurrencies are here to stay. They're not going to go away. And we feel very strongly and very clearly about that.
Mm-hmm. And I guess more to the point on regulation too is you highlighted in the report. So, that libertarian ideology that Bitcoin doesn't, shouldn't have any regulation. Well, when you highlight it, and then the New York BitLicense came under fire quite extensively, but the companies that are regulated by that BitLicense, it looks like they're the ones reporting accurate volume. And so, maybe that license wasn't necessarily such a bad thing that certain companies have to do when they are handling, people who want to do peer-to-peer transactions, they can operate outside of this regulated zone for the most part. But when you want to get into handling other people's money, that's where I think regulations are very important. And we've seen time and again with these exchanges that are not obeying the existing regulations, that they're not doing a good job in this custody. So I think people that are following FinCEN or following the BitLicense have reported more accurate data. So
yeah, absolutely. And I think Louis Brandeis said, sunlight is the best disinfectant. And part of the problem is that if you don't have any rules in place, then you have situations that occurred like what happened with the ICO mania in 2017 and 2018, right? And what happened there is people got scammed. People got hurt. People lost money. Part of that is perhaps there wasn't enough regulatory clarity at the time, but the reality is people just broke the law and they issued securities in a way that they weren't allowed to. But we're seeing regulatory enforcement actions against those types of projects. We're seeing continued issuance of guidance from the regulatory community. We're excited about that. We think that's a really good thing. We think that the space will not be able to evolve until we're able to clean up that trash. I think that's a large part of what we were doing in our presentation to kind of tie it back in is we were trying to show that you have to separate this other stuff that's going on from what the real thing that's happening is. And an example of that is Bitcoin is not an ICO. Bitcoin is not ICOs in general. Bitcoin is a different thing. And some of the risk in having a broad dialogue about cryptocurrencies is making sure that you are distinguishing properly across what the different things are. So yeah, we have a general view that particularly the United States regulators, they are pro-consumer. They do want to do the right thing. They take it very seriously. We think that they're getting very well educated on the space, or they have been very well educated on the space. We anticipate that they are going to continue to take enforcement actions to get rid of the bad actors and lay the groundwork for allowing Bitcoin and cryptocurrencies in general to flourish, and we're optimistic on that front.
Absolutely. And then in terms of volume, so what exchanges did you determine to be kind of the trustworthy reporting of volume?
Yeah, so we took a look at the 81 exchanges that reported more than $1 million worth of daily volume to widely reported media sites. And what we got down to at the end was a list of 10 exchanges that were left that we thought showed real actual volume trading on a daily basis. I actually don't have the list of the 10 in front of me.
I
Binance,
have it, if you don't mind. I
yeah,
just love to read it out so that people, if they are trading on some of the other ones, they can know, maybe they should look at these
yeah.
ones. And the numbers were interesting. Like, so Binance came in at the top with 110 million volume. And what was that? Is that volume, the 110, is that, what time span is that on, I wonder?
Yeah, that's average. That's average daily over a
Okay.
4-day period.
Okay. And then Bitfinex was next with 38 million, and then Kraken with 31 million, Bitstamp with 31 million, Coinbase with 27 million, Bitflyer 14 million, Gemini 8 million, iBit 6 million, Bittrex 5 million, and Poloniex with 1.4 million.
Thank you for sharing the list. Yeah, I think what is some of the conclusions that you can draw about that list is if you look at, there's a great chart in the presentation that shows a sort of a pie of where the volume is occurring based on widely reported numbers. And did you want to jump in with something, Sasha?
Oh, no. Well, yeah, I guess, yeah, I noticed, a lot of it was saying that the U.S. only attributed 1% of volume, and then your report showed U.S. attributed, I believe it was 27 or 29%, so a much larger piece of the pie.
Yeah, absolutely. And that's one of the conclusions that you can draw is
And,
that.
one thing, that's the U.S. people using VPNs located in the U.S. I highly suspect there's a lot more with VPNs saying they're in Switzerland or something.
Oh yeah, that's interesting. I wonder about looking into that. It's an interesting point. But yeah, I think that one of those conclusions is that it would be weird if the world's largest and most developed economy and the wealthiest population were only contributing 1% to average daily volume. If you look at average daily volume of any other financial asset, if you look at grains, or if you look at crude oil, or if you look at gold, or if you look at stocks, or if you look at bonds, or if you look at cars that are purchased, the United States contributes an outsized amount to whatever that bar chart, whatever that pie chart is. So it's a little bit of a head scratcher when you look at the reported data and you see that it only contributes 1%. But we showed in our research that's just simply not the case. A lot of the volume does happen on U.S. exchanges. Those exchanges do, as you know, interface with some sort of regulation in a variety of ways, and we think that's an important thing to point out.
Mm-hmm. Absolutely. And so one other thing, I guess, around the regulation is a lot of these exchanges might be, I think Coinbase recently got its ATS license, so it's capable of selling securities without running afoul of the SEC, but a lot of those other ones might be selling unregistered securities on it. And so do you think I personally expect that's going to be the next wave of enforcement that we see, even using the term exchange. If you're not a national securities exchange, you're not supposed to call yourself an exchange. So I think we're probably going to see more. We saw one regulatory action against that Ethereum-based one that was supposedly a decentralized exchange, Ether Delta, but I wonder if we'll see any, against some of the more, prominent exchanges, and will that impact the ETF at all? Or do you see any challenge around that?
So two good questions there. I think one is like, where is the area that we're hopeful that more regulatory clarity will come, and where is the area that the industry is looking for more regulatory clarity? And I'll keep that separate from our Bitcoin ETF discussion for a moment. I think that area is the one you're touching on. It is what are securities and what are not securities? How do you classify the different tokens. I think, you go down the list a little bit beyond the top 2, 3, 4, 5, and things start to get confusing. The SEC has offered a significant amount of guidance. We've had the Howey test for quite a long time, obviously, as you know. And we also have the speech that was given last summer by SEC Director William Hinman about how you can apply these facts and circumstances tests to whether or not a token is a security. But there's also this fairly challenging dynamic, which is that there's also been guidance that something can start its life as a security and evolve into a place where it is no longer a security. This is a relatively new phenomenon, right? This is a new dynamic, something that didn't exist before. So it makes sense that we're taking time to figure out exactly how it's treated. But I think as it relates to securities law in particular, how do you classify these things? And then how can you properly comply with the ability to list and trade these things? And what are they is a really interesting question. I don't know how quickly we'll get guidance on that because it's kind of challenging. We do know anecdotally that a number of different platforms have applied for or in various stages of their application for getting ATSs and broker-dealer licenses. But there's not clarity on exactly how that's going to shake out. And then the second part answer is that no, we don't think that really matters for the exchange-traded fund application related to the Bitwise Bitcoin ETF. And the reason we don't think that is because we think of Bitcoin as separate. Bitcoin has clearly been viewed under the eyes of the US regulatory regime as a commodity. Our application is for a 1933 Act ETF that would invest strictly in Bitcoin. And we think that the questions that exist for how are these other tokens that have sort of an as yet to be determined categorization, how are those going to be handled, and how can you handle those in a regulatorily compliant manner? We think that's a different question, although a really interesting one and important for the rest of our business. We think that's different from talking about Bitcoin and the Bitcoin ETF proposal.
Okay, agreed, and thanks for clarifying.
Yeah.
So there have been, is it 8 other ETF applications have been submitted to the SEC? What do you think are the main components that set your application apart from those ones?
Yeah, that's another really good question. I think the way that we've thought about, go back to the process and talk about how we've approached it. And I think that's really what sets us apart is just the way that we've thought about answering the questions. We've not endeavored to circle around the questions that have been answered or look for different questions and say that to the regulators that we think you're not approaching it the right way. You should think about it this way. We've looked at everything that has been written, everything that has been discussed, every question that has been asked, and we think the only way to realistically respond is to go line by line and answer every one of those single questions. And we're optimistic that we've evolved to a state in the market that we can answer all those questions. Things that are specifically different and are disclosed in our presentation, I would talk about third-party custody. I would talk about the way that we calculate the daily NAV. And those are the primary things that I would point to as the differentiating factors between our application and the other ones that have come before us.
Mm-hmm. Okay. And I see we're kind of running out of time here, but if I can squeeze 2 more questions in.
All right, 2 more, no problem.
Thanks. So I know Europe has the CoinShares ETF. How has that grown over the year? And is there any, any of their process that you can think would, that you can emulate, or that the SEC could look at that experience and think, it's a safe market to enter?
Yeah, sure. I'm glad you brought those up. I actually should have mentioned those earlier, talking about what we've seen in terms of the potential flow question, the size of those products. There are actually now 2 different jurisdictions in Europe that have allowed the listing of exchange-traded products. Some are on NASDAQ Stockholm. Those are the XBT provider products from CoinShares. And then there are some that are listed on the SIX Swiss exchange from a company called Amun. We think this is exactly the type of global competitiveness that I was mentioning earlier, which is that other regulatory regimes and other exchanges will begin to advance the ball in terms of bringing listed products and allowing listed products on their national securities exchanges. We think that there are things about the way that our product will be designed that are favorable for U.S. investors in particular. Maybe they're not even going to be accessible. The foreign products may not even be accessible to certain U.S.-based investors. We think there will be things that will be favorable about our design relative to those. But we think those are good products. There's good disclosure for them. We're happy to see them listed on the exchanges that they're listed on. We're happy to see that they're interacting with their regulators in a healthy way and disclosing the risks through tried and true regulatory pathways. And we're excited that those products list in the overseas jurisdictions. And we're looking forward to a future where we think most jurisdictions will have listed exchange products.
Excellent. And then I guess the last one, what about insurance? Like, how does insurance work for a typical ETF? And are there any challenges dealing with the Bitcoin market? I know that's been a big challenge for, banking situations, but is there any concerns of insurance on an ETF side?
Yeah, good question. I think one of the areas that we've seen develop dramatically over the past year or so is the insurance market for custodians who hold Bitcoin.
Okay.
It wouldn't occur sort of at the ETF level, if you will, where the insurance would occur would be at the custodian. What's the insurance policy that custodian has over the assets that they have in their safe storage? We think that market has developed a lot in the past year. Most of the custodians that I mentioned earlier, the three that I mentioned earlier, have various types of insurance policies in place for the digital assets that they have in their safekeeping. And we think that this market is going to grow, but it exists now in a way that is roughly commensurate with the way that custodians would have insurance over their other assets that they have in safekeeping. So we think that our custodians will be in a position to offer some measure of insurance over the assets, and that's another pocket where the industry has developed a lot in the last year.
Excellent. Oh, that's very encouraging. Well, thank you so much, Teddy, for your time and all this information and just shedding light on the state of the crypto market in general with that report. I'm so glad that it was, I don't know if you guys even intended for it to get made public or the SEC made it public, but it was really, really interesting to read. And I encourage everyone, I'll put a link to it in the bio, but it's worth looking at. Absolutely. Mm-hmm.
Well, thank you for having me on, Sasha. It's been a pleasure to enjoy the sort of the level of questions that you have. Obviously, you spent a lot of time studying this stuff and you're passionate about it. So it's been a pleasure to be a guest. Thanks for having us on. We're excited to do it again.
Thank you. Great. Yeah. Hopefully next time, it'll be like, oh, you're the first to market ETF and how's everything going? But where can people follow you? What's the best way to reach you if they have any questions or?
Yeah, sure. So our public website is bitwiseinvestments.com. People could also follow our business's Twitter account @bitwiseinvest.
Okay. All right. And I'll put links to them. I'll tag it in when I share it on Twitter as well.
Cool.
Okay. Well, thank you so much. And have a great weekend here.
Thanks, Sasha. It's been great to chat.
Thanks.